Okay, so good morning, everyone. Welcome to today's macro snapshot. We are, what are we? Tuesday, June the 11th, 2024. Recording this as I start now about 7:30 in the morning. I'll keep it short today, guys, because obviously there's a lot going on tomorrow with the CPI and, of course, the Fed. So I'll probably do some kind of sort of preview or more detailed video later on today. What we do have overnight is we just had some rumors coming out of France that Macron is considering, in the event that the far right does extremely well in the upcoming parliamentary elections, that he might resign. That has subsequently been denied. It just seems to be a rumor. But you can just see here, looking at on the daily chart here of the 10-year in the French bonds here, another big sell-off, since this morning's open at 2 a.m. Eastern time. So you can see here that the French OAT under a lot of pressure. We also see, for example, the Italian bonds starting to come under pressure, a little bit of contagion there. And of course, on the back of that, you see there's suddenly the spread between the Italian bonds over the German bonds, which of course is considered their safe haven, has really started to explode up, like I think 7, 8, 9, 10 basis points just in the last, 2 or 3 hours or so. So it looks as though the peripheral spreads are starting to come under a little bit of pressure, at least compared to the German one. And if we look at the some of the yields, just see what's going on here, which we'll scroll down to in a second, if I have them. I think I've got them here somewhere. Yeah, excuse me. You can see here the French yield. Now, I had thought that 3-point, 2.5 level was a good entry level for the French bonds. But obviously, with the political machinations which have been going on, it looks as though that might want to bleed more towards the top side. But if we start to get a little bit of stability and we see that getting up to 3.567, I think that'd be an extremely attractive entry point, when and if it gets up there in terms of the yield. But in order to see that, we'd have to see some calming down in the spreads. You see here, of course, look what's going on with the French spread here over the German one. You see that's gone up. I mean, how many basis points? It's 55 up to about, that's about 11 or 12 basis points that's gone up. But again, I think there's going to be some opportunities here. Maybe there's going to be, a little bit of instability for the next week or two. But if we start getting opinion polls leading into the first round, which I think is on June the 30th, if the opinion polls start saying that the far right is not going to be doing as well as they had hoped, a little bit more support for the centrists, I think we could start to see these spreads come back in. I think, people could start putting in a bid at the lows for some of the French bonds and maybe the Italian bonds. So it's going to be quite interesting. But in the meantime, what we've seen is in the German, it seems to have been a bit of a safe haven, not really any escalation here in the German bond. And to be honest, apart from that, we're seeing over in the US a little bit of a bid here for the US 10 years. So we're seeing that some of the bonds over in the US space are being a little bit of a safe haven bid. On the back of that, of course, for the currencies, what we're seeing is that the dollar continues to be pretty strong. And again, as I never cease to repeat, the dollar index is about 58% euro. So you can see the dollar index, no surprise that on euro weakness here. You see the euro gapping down yesterday at the open, and this is the futures here. And then further sort of weakness. So the euro seems to be under quite a lot of pressure. We also see that against something like the Swiss franc, which is the safe haven over in Europe. Oops, sorry, that's the Aussie. Where's the euro Swiss franc? Here we go. And you see here that continuing on from yesterday, we see that, on the background, with the background of these sort of potential sort of resignation rumors of Macron, that the euro is losing out also towards the Swiss franc. So that's a pretty good one to be trading on the spot. Any sort of headlines, which indicate less popularity of the far right or the far left, more stability, et cetera, less risk, essentially, that will damage the Swiss franc considered, in opposition to the euro. So that's kind of an interesting one. Also getting to quite an interesting sort of technical level here. It's a 50% fib retracement if you go back to this impulse here. So the point is that any news of stabilization, I think euro Swissy could push upwards a little bit. But of course, we've got the CPI in the US and the Fed tomorrow. So apart from that, we don't really have any data today. The one thing we do have today is a US auction. So we do have the 10-year. So kind of interesting if we just zoom in a little bit. I'm going to put this on a, let's say, a 5-minute chart and just look at the US 10-year note because, where are we? So just on the futures here. And what you can see here is that the 10-year, it came down a lot, obviously, on non-farm payrolls last Friday. You see this big sort of red candle here. Has been stabilizing, just pushing up a little bit here. But it's kind of an interesting level here around the 1.10914, just because we do have a large amount of issuance today at 1 p.m. We have the auction. If that auction does not go well, and keep in mind that yesterday we had it tailed by, I think it was 1.3 basis points to 3. So it's going to be absolutely critical today. And then, of course, after the Fed on Thursday, we had the 30-year auction. But let's just see if the market is happy to absorb this sort of 10-year auction today. If not, we could see that sort of under a bit more pressure leading into the CPI if we have a little bit of a weak auction today. And to be honest, just building in the concession, which is what I think the market might want to do, I find it a little bit hard to believe that the 10-year is going to push too much higher than where we are just at the moment, in front of the auction happening in about, 5 or 6 hours or so. So that's something I'll be looking out for. Other thing as well is oil. I'll put it back on the daily chart here. Now, oil had a bit of a sort of a punch out yesterday, a push up towards the high. Again, what I've been saying here is that it was oversold. There was a reactionary bounce. I personally thought it might find some resistance here at this fib resistance, but it didn't, and it's gone through. And we have to say at this point, the bulls have retaken a little bit of the initiative. What I'm keeping my eyes out on is the following couple of things. You see here on the shorter term fib, which is kind of the red-orange one, just this retracement here. I was saying yesterday or last couple of days that could be a bit of resistance. I was wrong, and it's gone through the 50% retracement, pushed above the 61.8% retracement. That for me is the first truly bullish price action. But it's interesting that once we get around there, we're stalling out a little bit, which is not to say, of course, that it cannot now push up higher. We have OPEC reports coming out today in terms of where OPEC thinks the demand will be. We also have the EIA and the IEA, so the American and the Paris-based energy agencies coming out with their short-term sort of outlooks over the next 24 hours. So quite a lot of sort of data. When I say data, forecasts coming to the oil market and the energy market over the next 24 hours. So keep your eye out on the OPEC one coming out pretty soon. And as I say, the other two agencies, that could give the next direction for the oil market. If those agency reports signal tightening demand and increasing demand for oil, sure, that could be another push up. On the other hand, if they show a little bit of weakness or forecast weakness in demand for oil over the summer and autumn, maybe that's it for oil. One thing as well, which is interesting to me, is that gasoline, you see here, RB1 contract, showing a little bit of red here, a little bit of weakness on the daily chart. If we throw that, let's say something a bit more short-term, like a 15-minute chart, you can see that, I mean, just since about 3:45 this morning, that's shown a little bit of weakness. So that's definitely something to be looking out for. If gasoline cannot show any strength, it's going to be difficult for crude to continue upwards. We shall see, all be revealed. So I think that's just about it, guys. Just want to have a quick look at some of the metals. Overnight, we had some slightly weak data from China. So we can see that copper giving back that gain from yesterday. A lot of the base metals are down. So aluminium, iron ore, copper, all down a little bit overnight, just not, as I say, on that softer data out of China. But also we have, pretty high inventory still. If you look at something like the Shanghai index, the Shanghai futures exchange, the inventory levels there are pretty high all across the industrial metals. So industrial metals are under a little bit of pressure, and that you've got to say is going to drag down copper. You can see silver also down. Gold not down as much, in fact, pretty stable. And again, there's slightly different dynamics, of course, with gold in terms of the yields, and obviously, possibly on the macro news, a little bit of a safe haven bid. But honestly, the direction of all this stuff is going to be determined by the CPI tomorrow. Okay, so I'll leave it there, guys. Pretty quick one this morning, but as I say, no economic data in the US coming out except for the bond auctions, the 10-year auctions at 1 p.m. I will probably do, as I said, some kind of CPI FOMC decision sort of video a bit later on, a few comments on that. Take care. Hope that's useful and have a great day. Thank you.